All attendees are in listen-only mode.
Good afternoon, everybody. I hope you can hear me. My name is Sean van den Berg. I'm from PSG Online. I head up client education. Today we're talking about finding stocks that are growing earnings aggressively and safely. And once again, I've got Dr. David Paul from VectorVest South Africa in the room here with me. And he'll be talking about the program and how to use it more effectively, and ultimately, obviously, as an investor, but also as a trader. And I'm going to hand over to Dr. David Paul now.
Good afternoon, everyone. David Paul speaking. Sean, thanks very much for having me along. It's a great pleasure to be here. Folks, I've been trading in these markets for quite a long time now, and just recently I've tripped over this really good edge in markets. Many of you will probably have heard of Anthony Robbins, the motivational speaker. And he's just, in fact, got himself into the stock trading stroke training game, and he's come up with a new book, which is a rehash, I suppose, of Market Wizards, which was written about 20 years ago, where he, in fact, interviews 50 of the best traders in the world. And he's been mentoring, it seems, Paul Tudor Jones for the last 20 years, who's quite a renowned trader. And the question that he asks every single person that he interviews, what is your edge? What have you got that allows you to take money out of markets when there's thousands and thousands of other people out there who are incredibly smart also trying to take money out of markets? So my question to you this afternoon to think about is, what is your edge in markets? So if you just make a note of that and just think about that, what is your edge? Let me tell you what the VectorVest edge is. At VectorVest, we look for shares that are, one, undervalued, two, that are growing their earnings both aggressively and safely, that are going up in price, and we want to buy those shares into a general market that's going up. And it's a type of investing, stroke trading, that I like to call value momentum investing. We're looking for value, but we want the darn thing to be going our way. So that VectorVest does its best to integrate the fundamental position of a company with the technical position of a company, the trend, with the technical position of the overall market, i.e. the trend of the overall market. And that's my edge. Does it mean I get it right all the time? Of course it doesn't. But it does mean that I get it right with an acceptable hit rate. And when I am right, I make quite a bit more cash than I lose when I'm wrong. And that's my edge. I don't. We have losses, that's for sure, but the losses are manageable. So let me show you how this all works. So I'm using Sean's computer here. So if I right-click on that and I end the show, and I go into the VectorVest program, and just there. That's the front page of the VectorVest program, ladies and gentlemen. The front page of VectorVest is all about what I call the third leg of the stool. The third leg of the stool is the trend or the technical position of the general market. Now, the last time I was here, maybe 2 times ago, I talked a great deal about what the general market was doing. Today, my brief is to try and talk about the shares themselves. But to summarize the general market, on Friday at the close, there was 115 companies rising, 70 companies falling, and 173 going nowhere of the 358 stocks that were following on the Johannesburg Stock Exchange. And thus, this metric that we measure every day, the buy-sell ratio, is a reasonably healthy 1.64. The little traffic light at the top, in fact, records visually the short-term trend, or what VectorVest call the primary wave of the JSE. And it's stuck in amber, and this little guy just tells us that this morning VectorVest does not advocate buying any stocks at this time, which I think would have been fairly useful advice this morning. Now, down here, you can see that there's two words, and they're summarized on strategy on the front page. And if I was doing a webinar on market timing, I would explain exactly how these are defined. But today, it suffices to say that the first word refers to the short-term trend of the Johannesburg Stock Exchange, and the second word refers to the longer-term trend of the Johannesburg Stock Exchange. And this morning, we have a situation where the short-term trend is down, but the longer-term trend remains up. And VectorVest, in fact, does not advocate buying stocks at this time. So that can change, and with a couple of days up, we could go back up into an up-up situation. So the front page does its best to try and summarize what the general market is doing, and today VectorVest is saying that prudent investors should move to the sidelines, and active traders should play the market up and down as it develops with a bias to the downside. And that's what the summary is saying. Let's look at some shares. Find the shares under Viewers, and just click on Stock Viewer. And with any luck, internet permitting, it's going to in fact put up all the shares in the market. I think we're probably just going to default to the top 50 to take the grunt off the internet. Come on, girl, you can do it. Yeah, there we go. Right at the top, we have Telkom. Now, Telkom has been at the top for most of the year, and we have people in the room smiling because they can't believe that Telkom could be at the top of the list, and most investors stroke traders out there have missed a massive opportunity because they also felt that Telkom couldn't be at the top of the list. But Telkom has been at the top of the list for most of the year. It's trading at 68 Rand. Okay, that's the code listed on the JSE, folks. If you ever get with the South African subscription of VectorVest comes the American subscription for free, and there are quite a few exchanges. NASDAQ and the New York Stock Exchange come to mind. In London there are two, the LSE and AIM, which is the equivalent of our AltX. So trading at 68. Now, every evening, VectorVest calculates the value of every share in the marketplace. It does that with an algorithm that's been a work in progress now for 26 years. So what we do is we look at the balance sheet, we look at the income statement, we look at the cash flow statement, we look at sales and sales margins, and we take 17 inputs over the last 5 years, and from that we calculate the value of every share. And as you can see, we calculated the value of Telkom as 82 Rand, and thus Telkom is undervalued, and we favor undervalued shares. So that's the first unique VectorVest measurement, is this value. There's nothing unique about this 31 cents. You can get that from the paper. That was 0.45% up on the day. Now, a really, really important number, and probably the most important number on VectorVest, which is a key part of today's webcast, is relative value. Because relative value is a measure of the earnings potential over the next 3 years. So here's how we work this out. We project the earnings of Telkom and every other share in the market for the next 3 years. We do that by extrapolating from the financial statements. We also get a small input from the Investment Analyst Society of what they feel the earnings flow is going to be. Again, the model has been around for 26 years, and VectorVest is a market leader in a very competitive environment in the US. We calculate the earnings flow over the next 3 years. We make the following assumption that those earnings will be fully discounted into the price at some time over the next 3 years, not when. And we calculate what the price will be. We take that projected price and we subtract it from the price yesterday to calculate the upside. And we take the upside and we divide that upside by what a risk-free investment will pay over the next 3 years. Now, in the South African model, the risk-free investment is a short-dated South African bond. Telkom's got an RV of 1.5, and that's saying that over the next 3 years, we feel that the probabilities greatly favor Telkom outperforming a short-dated government bond by 50%. On a scale between 0 and 2, anything above 1.3 is excellent, and 1.5 is getting towards the compelling stage. So that's good. The next number, relative safety. Now, relative value, we project the future. And the future is a very slippery commodity, according to Mark Twain. Relative safety is a very, very important number. But it's a really accurate number to compute because there's no projection. Again, we look at the last 5 years' financial statements. Again, we look at the balance sheets, we look at the income statements, we look at the cash flow statements, sales, and we make a judgment as to whether these numbers are getting better or these numbers are getting worse. Those numbers are sucked in, and we spit them out between 0 and 2. Above 1, the safety is good. Above 1.3, the safety is excellent. So on Telkom, we have a share that for all year has been undervalued, that has got strong, excellent earnings potential over the next 3 years, where the numbers are getting better. Relative value and relative safety, ladies and gentlemen, are fundamental measures of the share. There's no timing at all in there. Relative value of 1.5, saying it's going to outperform a risk-free investment by 50% in 3 years. It doesn't tell you when in the 3 years that's going to happen. And as you know, shares are rarely linear creatures. They tend to run, do nothing, run again. So no timing whatsoever in relative value and relative safety. The third VectorVest metric is relative timing, which measures the trend. And it measures the trend and averages it out on a daily time frame, a weekly time frame, and a monthly time frame. It mathematically massages the trend between 0 and 2. Above 1, the darn thing is rising. Below 1, the darn thing is falling. The further above 1, the faster it's rising. So it measures both the strength of the trend and the dynamics, the speed of the trend. I think for those of you that are conventional technical analysts, it's closest to the MACD indicator in its derivation. MACD made famous by a very good friend of mine called Jerry Appel. Now, what the guys at VectorVest and Bart DeLeo, who put this all together, did next is that they put relative value, relative safety, and relative timing together into the one master indicator called VST. And as a default, ladies and gentlemen, all of the shares on the JSE are sorted by descending VST. And that's where the winners are. Every day we work out whether the share is rising or falling, and we attach a buy, sell, or a hold recommendation to every share in the database. Now, the buy, sell, and hold can be used to time the market, but it's really not a timing indicator. It's there for VectorVest to make a judgment on the breadth of the advance. And as I said earlier, every day we work out the number of shares rising divided by the number of shares falling to actually work out whether this market is rising across the board or rising in one or two issues. Okay, so the buy-sell ratio is a big part of the VectorVest market timing model that I skimmed over at the outset. I did it in detail a couple of months back. We put a stop loss in every share in the marketplace. The stop loss is based on a moving average, but it's adjusted. It's adjusted for two things. It's adjusted for the fundamentals, and it's adjusted for the volatility of the share. Some shares are intrinsically noisier than others, so it does its best to try and keep the stop well out of the way. If the fundamentals are good, the stop loss is invariably wider. It gives the share much more room to move. Now, these numbers to the right-hand side, folks, are our projections of the future. So I quite frequently get questions from people saying that, hey, that earnings per share is a mile away from what we see in the paper. And that's because the business day is looking back, and the earnings per share on the program is Vector V's best shot at the future. And it is our best shot at the future. The future is a very slippery commodity, as any of you that have been trading for a while will attest. So a very slippery commodity indeed. We don't live in a world full of certainties in the market. We live in a world full of probabilities. We all understand probabilities in an analytical nature, but you struggle to understand them at a stomach level, and that takes a bit of practice. So these numbers are in fact the numbers that are used to calculate relative value, relative safety, and relative timing. So if I have a quick look now at what the presentation is all about, I'm looking for shares, guys, that are undervalued, that are aggressively growing their earnings safely, that are going up. And Telcom is one of those. Now, I'm not saying for a second that we want to buy it tomorrow. We have to use our cup, okay, to try and get in at an elegant level. So this is not a black box. You still have got to bring a little bit of knowledge to the party, and I'm going to talk about good entry points in a second. This company, Sean, can you spell? I've never been able to pronounce that Sekunjala thing. How do you pronounce that? Sean's just pronounced it for you. Shout there.
Stochastic.
Okay, I know the guy who runs it, but I can't pronounce it. I've only been here 33 years, so that's 34 in fact. We have a young man from Cincinnati sitting in with us this morning who's the second row forward. Do you play for the first or the seconds? Are you still in grade 9? Okay, so I was telling him that I played rugby for Transvaal when I first came here, and I could see him looking at say that old coot didn't play rugby for anybody. See it in his eyes. Sekunjala, if I pronounced that correctly, is trading at 140. We believe it's worth 111. The relative value is on the tad of the low. I don't like to get involved in shares with a relative value below 1.3. And relative value is a measure of the earnings per share potential and the earnings per share growth potential. And if you read in Benjamin Graham's book, The Intelligent Investor, he says so beautifully that earnings per share growth is the engine that drives the share price. That's a really cool book to read, folks, if you haven't. And you can buy it. It's the best book on investment ever written, and you can buy it at 180 Rand out of CNA. Okay, that should be a bargain. Peregrine, 24. We believe it's worth 33. The relative value is 1.64, which is compelling. Relative safety is 1.53. This is saying these numbers are getting better. It's on a buy recommendation. That has to be in our list, at least for a look. Astral had a cracking run, hasn't it? 171, 220. Now, the numbers are good. Clearly many of you will shake in your seat as you think of chickens. Chickens have a terrible habit, folks, of dying when you've fed them for 6 weeks. They never die after the first week, it seems, but after you've fed them for 6 full weeks, they roll over and die. So Astral has got a relative value of 1.52, a relative safety of 1.46. It's not a buy recommendation. It needs to be looked at, that is for sure. Torre, okay, this is a gem of a little company, but it's overvalued in our book. And the relative safety, because it's relatively new, 1.09. I think that that's something that could be looked at by somebody who's got a good stomach for risk. But looking for conservative shares, probably not. Okay, I have a question here. Let's see if I can answer the question. It's a very good question, Ludovic. It's a buy because it's rising. The buy is largely a trend following technical measure. To be rated a buy, sir, the VST must be above 1, that's all, and the share price must be moving away from its moving average, that's all, rising. So it's a technical measure, okay? Many momentum traders would not have a problem buying into a share that's trading above its value as long as the relative value is high. Okay, so the buy, sell, and hold are there to measure the breadth of the advancer. So it's purely a technical measure of the share, but really good question. So I'm going to leave Tor out. Coronation's interesting. It just keeps on going. Coronation trading at 110. We believe it's worth 71. And I've checked. Coronation is one of the most popular shares. I get asked about it all the time. The institutional valuation, I've got a few 75, 78, 80. So pretty much anybody who's anybody is saying that Coronation is in fact overvalued. Now remember, this valuation is our valuation now, but if we go across the page a little bit, we see that the relative value of Coronation is 1.4. Many people say, how can that be? How can the relative value be 1.4 if it's vastly overvalued? Here's the nub. Ladies and gentlemen, if the share price stays at 110 and the earnings come in as we anticipate over the next 3 years, at some time over the next 3 years, it's going to be massively undervalued. So the market is far from being stupid. So the market is more than happy to buy into Coronation well ahead of those results getting to the annual reports. So I haven't put it into any portfolios I've been following over the last few months, and I've missed out because of that. Okay, so what I am trying to do here is a very conservative way forward. Capitec. Capitec's had a great run. I'm happy that I got most of that run, and personally I was holding both PSG and Capitec, and I had to, in fact I was overweight, and I thought I'd better get out of one of them, so I've in fact sold out of Capitec at about over 300, and I'm still holding PSG. I'm getting thumbs up from everybody in the room here, and heads nodding. So I'm holding PSG. I've even got a clap in the back. Thank you, Mr. Moton. Okay. Very kind of you. Capitec, it's fully valued, and I'm going to leave that now. Digicor, another Cobus Visa. Is it Cobus Visa? He was the rugby player. Is it? Christo Visa. Okay. It owns 20% of it, I think. Overvalued, and relative value not looking good. First Rand. First Rand, there's still some legs in it, and I am a proud holder of First Rand personally. Pioneer. TAD had a great run. TAD overvalued. RMB, there's still legs. Resilient. Lots of legs after a really good run, folks. Steinhoff, still legs in it. Did they pay too much? That's the big question. Should they have sent out a cautionary? That's another large question. Okay. 73.68. It's overvalued, and that is a little on the low side. Clicks, no. Foschini, no. EOH. Now, EOH is in the same boat, ladies and gentlemen, as Coronation. EOH was one of my biggest winners last year, and it's just kept on going. It's trading well above value. As you can see, relative value on a scale between 0 and 2, not bad. Relative safety is superb, and if you know this little company, you will know that they haven't put a foot wrong in living memory. So again, we believe it's worth 96. The market's buying it at 115. The market is far from being stupid. The market is saying that we're more than happy to price this in advance of the numbers coming in. Ladies and gentlemen, if you buy shares that are overvalued with a high relative value and a high relative safety, you normally do quite well. But just remember that if you buy a share that's trading above the vector-based valuation, which is, I assure you, very close to the institutional consensus, that if they don't deliver, the share will get a good old-fashioned South African clap. Okay? I think that in Coronation and EOH, there was very little chance of that happening. These guys just haven't disappointed in a long time. But that many shares will trade above the vector-based valuation. For example, Mr. Price has traded above the vector-based valuation for as long as I've been, in fact, involved with vector-based South Africa, which is 4 years now. And it just kept on going. The market trusts them to, in fact, perform. ShopRite was the same. ShopRite then disappointed on earnings growth about 18 months ago, and they came down and came down quite hard. ShopRite looking very, very good at the moment, I may add. So Discovery, little legs here, 1.22, so that's something could go on our list, certainly. Fountainhead, nope, but looks good. MediClinic, there's Mr. Price. 236, our numbers say that it's worth 129. So it's just gone a long, long way. Tonguard, exactly the same. West Coal. West Coal's an interesting little coal miner. We believe it's worth 256. The relative value is wonderful. Relative safety, a little on the low side, folks. So just be careful there. I am holding it. It's done nothing for me in the last year. Prior to that, it doubled, but it's done nothing in the last year. So I'm holding it nervously. And that's how I've gone in a few minutes. And I think I was listening to J.P. Verster, if I pronounced that correctly, who reads the market very well the other day, and he was saying that he can find very little value in the South African market, and I would agree with that. Zeder, look at Zeder, folks. It's come a long way, 710, 730, so it's undervalued, 146, 114. That's certainly worth a look. Okay, so Lewis needs to do something. So I've got a question here. Sound is gone, Ludovic says. Could we have a sound check, folks? Okay. Anybody else like to we've got one man who said the sound went down. Anybody else like to tell us whether the sound is good? Sound's fine. Thank you, Neil. Thank you, Neil. Will I see you tonight, Neil? We have user groups around the country for VectorVest. No sound for Steve. Sound is good for Josias. That's great, Neil. Look forward to seeing you, man. We have user groups for VectorVest around the country. Tonight is in Pretoria at the Irene Country Lodge. Everybody's welcome. Tomorrow night at the Santon Holiday Inn, everybody's welcome. That's on Rivonia Road. Wednesday night in Durban at the Riverside, and Thursday night at the Crystal Towers in Cape Town, which is out in Canal Walk. More than welcome. We all start at all meetings start at 6:30. Okay. Let's go back now. What I can do now is I can chart all of those, and I can just graph or chart selected. And I'm going to pull them all up, and let's see. This is a very conservative mix, and we're asking the internet to do quite a lot pulling. There we go. And I'm going to, there's Telkom. I'm going to get rid of that for a second. There's the trends, folks. These are my own lines on it. That was my first trade in Telkom here. And that trade, in fact, was done while I did a webcast one Thursday evening. I told everybody about that trade on the Thursday evening down here. And it was real rocket science, of course. Fundamentals are good, and it came back and kissed the old top. So, and then we got an outside day, and it flew up the page. I traded that one. That was a break of an ascending triangle. It came right off here. And if I put up my old friend, the stochastic, I know Sean loves the stochastic, so if I can find it, here we go, technical analysis, stochastic, and just take it. You can see that these are my own construction lines. That was the one I did on the webcast, stochastic down here, showing reverse divergence. The price was rising, indicator falling, very rarely lets you down. Similarly here, I didn't trade this one, folks. Didn't trade that one because I just wasn't around. Similarly, this 13-period moving average, if you can do your best to grit your teeth and stay long above the 13-period moving average, you do just fine, okay? So if you were in Telcom now, I put the value up. The value is up there, okay? I'm going to put up earnings per share as well, just to really clutter the chart. And we can see the earnings per share ramped up, and at the minute it's pretty flat up here. That's always a worry, okay? That's our projection of earnings per share. Flat, I would like to see this rising. So this was the massive change in Telcom just down here. So this thing moving up the page, and as long as it's above the 13-period moving average, and I think that even the most aggressive traders should be doing their best to try and sit in the position. We'll see how it does today. But in a share, and I'll get rid of all of this stuff again, value, earnings per share, there's a bit more room. When you get a share that's trending, and the fundamentals are good, the averages that I put on here are the 13, 89, and the 200. And the 13's above the 89's, above the 200, all looking exceptionally good. You'll find, folks, that the 200 comes into its own when the market starts to go flat. And you'll find that the 200 is of limited use in a trending market, but when a market goes into a sideways region, you'll find that the 200 will give tremendous support and resistance numbers. All of the candle patterns, all of the stochastics and whatever, most institutional traders would not know anything about that. But if you speak to them about a 200-day moving average, they know exactly where the market is in relation to the 200-day moving average. It's largely the only technical indicator that the large fundamental traders use. So that was a good buying position, that was a good buying position, that was a good buying position. If you can do that with shares that have good fundamentals, then you can't go far wrong. So that's Telcom. And I couldn't buy it for all the money in the world, and effective S not doesn't, if I put on a trend line here, something like that, and I draw another trend line parallel to that, and I have to guess it. If I was in this particular share, guys, I would be taking profit somewhere up into that level, to the top of that channel. So that's what I would be doing. In fact, those of you that would like to enlighten yourself about targets and maybe are still smarting from Brait last week, if you draw that channel on Brait, you'll find that intraday on Brait, it went to the top of the channel to the tick, and on that one day it fell to the bottom of the channel to the tick. Now that is not magic. That's because the prime function of a market, ladies and gentlemen, is to fill orders. That's what a market's all about. It's not there to make you rich. It's there to fill orders. And the orders were based at the channel. The smartest money took the money off at the top of the channel, and the smartest money accumulated at the bottom of the channel. That's what happened. So there's Telcom, and I would, unless you were the short, it's broken out of this little range. Unless you're a really short-term trader, I think that there's limited in that. So, but that was the place down there. Okay. Let's see if we can. Now, here is Peregrine. Again, the stochastic was right down here. I've got 1389, 200. Trends look nicely in place. It's doing its best to break up. If you'd got filled somewhere down around there, then you're now sitting, sweating, waiting for it to break this high. Can't see it doing it today. Guys, the stochastic has got very limited ability to call the market against the trend. So the stochastic will get up right up to the 80 area. So if the trend was down, the stochastic being up at 80 would be a great shorting signal. But if the trend is strongly up, then the stochastic will sit up there. As you can see, it sat up at 80 as this thing flew up the page. So with the trend, it gives great signals. Against the trend, not that much use. And I was taught the stochastic by the chap who invented it. There is Astral. And I rest my case, folks. We have this three averages all saying yes. As long as the 13 and the 89 are okay, I'm happy. There was a place to accumulate, but the really cracking place to accumulate was just here. And then all of a sudden the market, in fact, confirms, moves up the page, runs up the page quite nicely, and away it goes. So again, we draw a channel from there to there, and probably somewhere up around here, that's where it's going to. I'll let you do that on your own. Okay. Let's look at another one. So there was opportunities here, folks. This is first round. That was my entry into first round. That's my own charts. I was tempted there, and then all of a sudden it came down, and then comes up above the 13 period moving average. Know where the damn thing goes. You don't have to be that bright, thank God, to make money in this. In fact, if anything, the thicker the better. Again, you can see the channel. We're right at the top of that channel presently. I have a position here, and clearly if I'm an investor I would be holding it, but I see that this market is right at the top of that channel. I think that certainly if you were trading it, and I assure you, ladies and gentlemen, that the tails in those candles were caused not by magic, they were caused by institutional orders based on that channel. That's why the market stopped there. They don't stop by magic. Okay, that if you're a trader and you've got a leverage position in first round, there was the entry point down here somewhere, as it starts to move up the page, I think that if you're trading it on leverage, then it's probably time to leave the party. If you're an investor, then there's probably plenty more upside there. But I think that you could have to anticipate a pullback. RMB is very closely linked. Resilient just keeps on going. Just keeps on going. We put on our value here, and I don't know what that was caused by there. Certainly there was something that came out there that caused the valuation to fall in the algorithm, and it just came right at the next set of books. So that looks fine to me. That looks fine. Pushing strongly up there. More than that. Now Steinhoff. Steinhoff, any of you out there read William O'Neill's book? It's called How to Make Money in Stocks, and Bill O'Neill, who I know very well, is a big proponent of what he calls the cup and handle pattern, and this is a textbook cup and handle. I think that Steinhoff must be a long-term holding based on that. I really like that pattern. The general market is in a down-up situation, and I won't do anything until I see the market moving back into an up-up situation, but I think that must be a strong long-term hold. Again, I've got Westcall, and I think I jumped one there. I'm very happy about Westcall. If I put another, it's got a relative safety of 0.95. which is not great, and it's the 13's broken up through the 89. The 200 is now in the way, and our valuation's up here. It's stuck in this. I've been holding it forever. When I say forever, a couple of years, and that was great. Big brute of a move, and then for the last year it's done nothing at all, and it caused a lot of frustration down here. I think that it's probably going to push back up the page. We shall see. Energy stocks and energy per se in a muddle, that is for sure, after Thursday's announcement by OPEC. ZED, I'll put on earnings per share here. Not the easiest share to trade in. Come on. There we go. Earnings per share. That doesn't convince me. I like to see earnings per share. Where did that go to now? Sorry, this is me trying to get the hang of Sean's mouse. No. Let's see if I can get this. Earnings per share doesn't fill me with a great deal of confidence. There we go. Earnings per share down around here doesn't fill me with a lot of confidence, but it's had a really, really great run. Again, I would be drawing lines under here, lines up there, and saying to myself that that looks as if it needs to pull back a little bit. The trend in the share looks fine. I think it's right at the top of a range. So difficult to find a great deal of value, but those are the shares, folks, that would seem to be outperforming the market. Now, VectorVest, one last thing, if I go back into the program itself, and I go to Unisearch, and I go to prudent searches, and Neil, I'm thinking about you now. And VectorVest have a proprietary indicator called the Comfort Index. And the Comfort Index measures a share that's in a strong trend with good fundamentals. So it looks and finds shares that are in the throes of a strong trend with limited volatility. Now, the research department have shown that shares like this tend to recover very strongly from a market sell-off. And I've constructed a very simple search to find those. Unisearch, you can search for any of the parameters in VectorVest to try and find shares that suit those parameters. I'm pulling that up now, I hope. Here we go. It's looking, everything in VectorVest runs between 0 and 2. And a comfort index of greater than 1.4 is finding a share that's in a proven trend with little volatility. In America, where there are 8,000 shares to choose from, the founder of VectorVest, Dr. Delito, believes that if a share is under $10 and the comfort index breaks up through 1.5, that you get a really strong little move. It's the basis of his aggressive trading plan. And unfortunately, I have to tell you that it's easier to make money in America than it is here. It's as simple as that. There's just so much more choice. If you are buying into shares that are growing their earnings aggressively and safely, there's not that many of those growth stocks around. In America, you're spoiled for choice, and also much easier to make money in America than it is in the UK. And the UK is in fact worse than here. Now, if I look for those shares now, if I go back a little bit. We had a strong move up in the South African market that started on Valentine's night, February the 14th. How do I know it started there? Well, you get a little green thing. How did I do that? This mouse is causing me challenges. There's a little green thing in February the 14th. Did you take your good wife out to dinner, Sean? Tight sod. If I go back to the 14th, I can in fact check, run that search on that particular date. This is quite a demanding search, and it's a small market of 300 or 400 shares. On that particular day, it gave CCO, Coronation, AECI, PSG, Telcom, Cargo Carriers, and Westco. And I can do a quick test of those to see how we would have got on. Basically, it's just a linear test between now and then. And on that particular portfolio, guys, we had 5 winners. There's Westco is down 10%, and CCO is down 5.8%, but the rest of them have done really well. Telcom and Coronation, of course, and PSG, of course, and that the general market is up 8% since last February, and that little portfolio with no trading at all is up 26%. So if you want to try and find shares that have got a mixture of good fundamentals and a strong trend, then this proprietary vector-based measurement called the Comfort Index does that. And it's called the Comfort Index because I think you would agree that a share moving up the page fairly smoothly gives you a lot more comfort than something that's flailing around all over the show. So some very unique measurements, and it's that's what vector-based is all about, folks. We're more than happy to put our money where our mouth is, because I'm more than happy to allow you to test the program for 60 days. And that's going to cost you about $9.95. If I can find the PowerPoint presentation, I can do that. And if I go right down to the end of it, more than welcome to have these slides. I just talk everybody through the slides, but under special offer, if you click on vectorvest.com/PSG60, here's what you're going to get. 60 days of vector-based for $9.95. I'm going to courier a copy of a 2-day investment seminar to you. I'm going to courier a copy of Stock Strategies and Common Sense, which is a really cool little book by Dr. DeLito. And then you get full access to the vector-based University. After the 60 days, if you decide to go ahead with it, vector-based invoiced at $49 a month. There are no binding contracts. If you want to stop it after a month, then you just simply stop it after a month. If we can't make you money, then you just stop it. There's no contracts, no lock-in. Ladies and gentlemen, thanks very much. Thanks for your attention. Sean, thanks for having me. More than happy to answer any questions if we've got some time. I have got some questions. I've answered that one on Second Jallo. That's Neil. And so that was about the sound. All right, guys, that's all from me. And if you want to avail yourself of that offer, if you go to vectorvest.co.za, then our telephone number is there. If you don't want to do it on the internet, then you can give the guys a call. Okay. Thanks very much. Sean, all yours.
Thank you, Dr. Paul. Thanks, guys. I hope you've enjoyed that. Just from my side quickly, I'm going to promote our upcoming events, our last 2 events for the year. I'm in Cape Town tomorrow for our last Traders Forum. When I wrote this, when I first chose this topic a few weeks ago, I thought it would be easy, but it's not so easy. Looking back over the year and then looking forward to 2015. So that's what we're basically discussing tomorrow in Cape Town. And then I've got my last webinar on the 12th of December, how to start a successful investment club. Many of you know that investment clubs are close to my heart, and quite a lot of interest from that. So those are our last 2 events for the year, and we'll put up some more events going into January and February. But from my side, thanks to Dr. David Paul once again, and here's my contact details, any questions you guys might have. There's my email address, there's our contact number, and I hope you've enjoyed this webinar. It's a good turnout for a Monday afternoon, and from our side, good luck and happy trading. All the best. Bye-bye.